Hello, everybody. This is Toni Turner, and welcome to the market now on Friday, March 20th at about 2 p.m. Eastern. Well, stocks are falling again so far today as traders monitor the Iran war, with the major averages on pace to record yet another losing week. The moves come after Iran and Israel exchanged strikes overnight, while the former also launched new attacks against energy sites in the Persian Gulf region. Crude prices are a bit higher today still, with West Texas Intermediate and Brent up more than 40% since the war began. And by the way, it's not all on Iran today. It's triple options expiration day, which usually always adds volatility to the market. So on that note, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now when I captured this chart today, right there, when I captured this chart today, the SPY was trading at $651 and a penny, or that's very close to another key level, 6,500 on the S&P 500 index itself. So it's an important line. It is trading right now at 7% below the all-time highs set up here in January at 697. Now, as we can see here, the SPY is now trading below its 20-day, the red line, its 20-day moving average, coming in at about 675 and change. The 50-day moving average is up here, the green line, at 583. And of course, now it's below, was hoping it wouldn't get there. Now it's below the 200-day moving average, coming in at $660 and change. So now, that's the black line here. So now we're below all three major moving averages. Now, we can't see it on this chart, but we know that the SPY has been climbing in an uptrend from we can't see the April lows, but it's been climbing in a very strong uptrend from last April's lows at 481, pretty much walking up its 20-day moving average, the red line, in a very strong uptrend, and until it got to these October highs, the all-time high right here at the time of 690, and from the April lows to the October high is a 44% gain. That's incredible. It's wonderful. After that high, as it makes sense, the SPY started showing signs of fatigue, falling to 652 in November. And yes, it actually showed signs of fatigue in October too. But it made that high, then it fell down here to 652. In November, then it gained energy and pushed back up here to 689, then dropped down to the 50-day at 671, then rallied up here to 696 and 697 in January, and started trading in a range here from 676 to 697 for 2 or 3 weeks, 4 weeks maybe. Then it broke about 2 to 3 weeks ago. It rolled over, broke that line there at about 676, and rolled over in the past 3 weeks to where we are now at 651. So we didn't think it would happen like this, but it did. So we're back down to the November lows here, even a little bit south of them by about a point today. So that, hoping we wouldn't break here, but hope is not a strategy. So we have resistance here at the 200-day should price want to move higher next week. We do have resistance at the 200-day moving average at 592. And of course, just right on up here, the resistance gets pretty thick. After you get here up over 670, there's a lot of resistance here. So on up from there. We do have potential support here. We can look, it's not on this chart, but well, right here, there's a little tiny bit of potential support right there at 634 from August and September. So with all this going on, please know that on the long side anyway, I'm watching for opportunities. I'm taking notes of everything I see that looks like it could be a great opportunity when this war ends, and it will, hopefully in the very near future, but I'm not actually going long yet. Our next chart is a daily chart of the Invesco QQQ, symbol QQQ. Of course, this is the ETF that follows our NASDAQ 100, which contains the top 100 non-financial stocks in the NASDAQ stock market, including all the large cap momentum stocks like the Magnificent Seven. Now, when I captured this chart today, the Qs was right at the low of the day here. When I captured this chart today, the Qs were trading at $582.43. That is now 9% below the all-time highs touched in October and January. So right here, 637 are those all-time highs right there. Now the Qs, like the SPY, are trading below the 20-day, the major moving averages. The 20 days coming in at 602.99. We can call it 603 if we want. The 50-day, the green line, is coming in at 610. And below the, and it's trading, of course, now below the 200-day moving average, which is coming in at the black line here at 591 and change. So we can't see it on the screen again. We can't see the April low, but from the Q's April low at 402, we know it rallied from there up in a very strong uptrend, a little more dramatic than the SPY, but a very dramatic uptrend to an all-time high up here in October at 637. So from those April lows at 402 up here to 637 was a 58% rally, which is really, really strong. So from these highs at 637 in October, we know the Qs dove down here to 585 in November, rallied back up to 628 in December, then fell to 600 and rallied and consolidated here, rallied along the 50 and 20-day moving averages. Then popped right back up here and retested that 636, 637 high from back here in October. So retested that high, then dropped down here to 594 and started trading sideways, trying to get over the 50-day, but not able to do it. And then finally in the last 2 weeks gave up and rolled over below down to where we are now at 582. So pretty strong market up until this moment in time. We knew that at some point, even before the war started, that the market would probably have as I say, pull into a rest stop here. Also, please know that on years where we have midterm elections, the market at some time during that year usually does dip 15%. So we have that on the menu as well. So it's all going on, it looks like. So now we have overhead resistance here. And when I tell you about these support levels and these moving averages and even resistance levels, it's because they actually many times come back into play when the market moves forward. So what was support can become resistance. What was resistance, when the price climbs above it, becomes support. So that's why all these levels can be relatively important in our trading planning as giving us information that we could really use that can really help. So, okay, so here we are now at 582, overhead resistance just above at 592, on up here to 628, and then on up to 637 and 636. We've already broken here. We had that these November lows here at 585. The Qs are down to 582. I won't fuss for 3 points, but it is breaking a little bit. We can, if we want to look over, we can see here, it's a little one there. I think there's another candle that comes down to about that low. So that's 560, potential support. So, but hopefully, again, hope is not a strategy, but hopefully we get a rally or a rebound before we get down to that 560 level. Again, I know this move is painful now, but it is going to create a lot of buying opportunities when the dust settles. So let's remember that. Our final chart today is a daily chart of the SPDR S&P Metals and Mining ETF. The XME is the symbol. The XME has 35 holdings in it. Top holdings include Core Mining, Freeport-McMoRan, Hecla Mining, Royal Gold, and Alcoa Metals and Mining. When I captured this chart today, right here, the XME was trading at $101.89. It is trading below the 20-day moving average, the red line, which is coming in at $113.75. The green line, which is the 50-day moving average, coming in at 118 and change. But it is still above. It is still above its 200-day moving average, which is coming in here at 95. Now, I suspect, nobody knows for sure, right? I suspect this ETF will rebound when the war is over, which I hope is very soon. And I'm not buying it here. I'm not buying anything right here. But I am going to put it on my watch list. Now, it did make an all-time high, and it gapped up that day and actually fell to a low. But it did make the all-time high in January at 135. But look down here at this RSI. This RSI was really climbing here. It's telling us, wow, the XME is really overbought. And the RSI down here, the 14-day RSI, actually went up to 84, which is a strong overbought position for sure, or strongly shown. I'm not going to say it was strong up here. It was ready to come down. Anyway, so it gapped up to that. Then the XME rolled over and fell down, making lower highs and lower lows to where it is now at 101 and change. So I'm not buying it yet, but I am watching it. It's on my watch list because, you know, it's still trading over the 200-day moving average. I believe gold stocks, gold miners, and other metals companies, for a lot of reasons, could rebound when this is over. So I'm going to watch how it behaves in the coming week. It is now sitting on price support from November, December, and it may have to go lower. I mean, this, of course, price here may have to go lower, depending on how long the war keeps going on. It is 32% off of its highs right now. That's high at 135. But again, when the war is over, we could give it a few days, 2 to 3 days to find a bottom, depending on what happens. When that happens, if I see that it looks like it can have a solid rebound with enough volume to accompany it, I may nibble on it with a stop that's 5 or 6% below my entry price. It'd be great if it can do so before it gets to the 200-day moving average. But again, that's hope, and hope doesn't work. Anyway, the 200-day is coming in down here at about 95, so I'm going to be watching that. So if and when the XME can rebound and is on solid footing again, I will, if it can get up and over wherever the 50-day moving average is at that time. Right now it's 118 and change. When and if it can get back over that 50-day moving average for 3 consecutive closes, I will probably add to my position, and of course by then my stop will be a trailing stop. So you may want to put the XME on your watch list for when this war is over again, hopefully very soon. Now, you know that for the past 3 weeks or so, I've been talking about the IGV, the software ETF. We've been watching that. I still own it. I own it. I've had my stop at 80 for quite a while, and it hasn't gone through it. It actually was holding up reasonably well today, considering. Also, I talked to you last week about our Global X Cloud Computing ETF, the CLOU. We looked at that about 3 weeks ago or so. That is hanging in there. I mean, it's not doing a dumpster dive. It's hanging in there. So just saying, amazingly, it's holding up pretty well. Not saying to get in, but it's holding up well. So, and as I told you guys last week, I am not going to go long on anything in a big way until the Strait of Hormuz has been opened. And now, please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless training programs. I think this one is the best for the scenario we're in right now. How to bottom fish like a pro. How to bottom fish like a pro is what we need right now. It's the perfect training to check out right now. In this program, I show you exactly how to detect with high probability that a stock or ETF is just about to reverse from a downtrend and move higher again. Again, that's really good for what we have going on right now. You'll learn how and when to buy, how to manage the trade, and when to take profits. Our new low price for this program is only $199. You should make that back pretty quickly. And you'll receive special bonuses when you order, including 1 month of Metastock daily charts or Metastock real-time charts for free. So from our ever popular 7 steps to successful trading, really good program. How to swing trade successfully, very, very popular. How to trade the trend to profits, one of my favorites. How to read charts, great for brushing up or for novices. 3 winning setups, perfect for short-term traders. Or as we were just talking about, how to bottom fish like a pro. Find out how my online programs can help you earn more money quickly and easily. And once you purchase, you have unlimited access to learn at your own pace. So be sure to check them out by going to the link on this screen, or easier still, just click on the orange button below. Until next week, please be very, very careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.